So in today's class, we're going to talk about single entry and incomplete records. So first off, what's the meaning of single entry and incomplete records? So single entry and incomplete records are accounting system that is used by different businesses to record financial transactions. And this system are simpler alternative to double entry bookkeeping, which is a more comprehensive method of recording transactions. So, single entry and incomplete records method are often used by small businesses or individuals who don't value the complexity of double entry bookkeeping. So, let's now go into the single entry system. In a single entry system, only one aspect of a transaction is recorded. Usually, this involves tracking cash flow, where only cash receipts and cash payments are recorded. This system does not provide a complete picture of a company's financial situation, since it lacks the systematic recording of all types of transactions. As a result, it can be challenging to accurately assess the financial health and performance of a business using single entry system alone. So, this system is more suitable for smaller businesses with fewer transactions and simpler financial structures. So guys, it is not compliant with generally accepted accounting principle. I mean the GAAP, and is not recommended for companies that need accurate financial reporting. So from the little explanation I gave above, we can now ascertain the little understanding of single entry system, also known as single entry bookkeeping system. So the, the single entry bookkeeping system is a simple and informal method of recording financial transactions. By this, I'm giving additional knowledge to what I said above, because it is generally used by small businesses, individuals, and organizations with relatively straightforward financial operations. Unlike double entry system, which is more comprehensive and accurate, the single entry system records only one aspect of a transaction. I mean just one, either the inflow, I mean the revenue, or the outflow, otherwise known as expense in account. So in the single entry system, transactions are recorded in a single column. I mean just a single column like this, typically in a journal or any kind of register. The records primarily include cash flows, I mean revenue as I said before, or cash outflows, expenses. Let's now talk about the key characteristics of the single entry system. The key characteristics is crucial, and I'm going to take them one after the other. The four characteristics of feature is simplicity. The single entry system is quite straightforward and very easy to use, thereby making it suitable for small businesses with limited accounting expertise. So with this, I'm going to cite a simple example for you to understand what simplicity means. Let me use Sarah Small Business Bakery. Let's assume Sarah runs a small bakery that specializes in cakes and pastries. And Sarah has a limited experience with accounting, and she prefers a simple method to keep track of her bakery's financial transactions. So guys, be following me. Let's now assume that Sarah decides to use the single entry system because it is not somehow bulky like double entry system. Now, every day, Sarah has to record bakery's cash transactions in a particular notebook. As an individual that doesn't have deep knowledge of accounting, right? So Sarah notes down all the cash received from the customers who purchases cakes and pastries from her, as well as any cash payments she made from ingredients or any other expenses. So guys, at the end of the day for Sarah, she adds up the total cash received and the total cash spent. For instance, now, on Monday, Sarah receives, let's say, $200 in cash from customers who buy cakes and pastries. She also spent $50 in cash to purchase flour, sugar, or any form of baking supplies. So Sarah records this transaction in her notebook as usual as she used to do. So she writes down the date, description of the transaction, and the corresponding amount, as I said earlier. So Sarah is able to quickly see that she made a profit of $150. I hope you guys know this where this 150 come from. The 150 is from the $200 she made minus the $50 for the initial day. So throughout the week, Sarah continues this practice, as I said before. And if she continues this practice, at the end of each day, Sarah tallies up the cash receipt and the money she spent. So this system helps her, I mean Sarah, to understand her daily cash flow and give a basic idea of her bakery's profitability. Why this approach, I mean the single entry, why this approach lacks the comprehensive analysis of accuracy of the double entry principle. It works well for Sarah's small businesses, I mean her bakery business, because Sarah finds it easy to manage and it gives her a basic overview of her business's financial situation without the need for her to know any complex knowledge of accounting. So I hope that example is taken under that. And in that example, the single entry system's simplicities allows Sarah to focus on her core business operation while still maintaining a basic knowledge of her financial transactions. I hope that simple example is taken in relation to simplicity. Another point is limited information. This system does not provide a complete picture of the financial health of an organization because as it only tracks cash flows and it does not account for assets, liabilities, equities, or other comprehensive financial details. The third one is incomplete accuracy. Due to its simplicity, the single entry system lacks the built-in checks and balances of the double entry system, which can lead to errors and inaccuracies in financial reporting. The another one, which is the fourth point, is inadequate for complex operations. The single entry system is not suitable for businesses with complex financial operations or multiple accounts or even the need for comprehensive financial statement. Another point, which is fifth point, is lack of accountability. Since it does not provide the same level of details as cross-referencing as the double entry system, as we all know, the single entry system may not be as reliable for auditing purposes, but rather literal purposes. Another point, which is the sixth point, is limited financial analysis. This is even obvious. With fewer details available, businesses using single entry system, this individual may find it very challenging to perform a kind of in-depth financial analysis and make informed decisions based on their financial records. So guys, in summary, the single entry system is a kind of basic way to keep track of cash inflows and outflows, but it is important for us to know as good as it is. It lacks the precision and comprehensive nature of double entry system, which is even preferred method for maintaining accurate financial records and generating complex financial statements.